following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends, as we start the show off. We're off 20 points, or up 20 points on the S&P cash at 2232. Volume comes in at 2.6 billion shares. As we said, it's very tough to be short in December. We were looking for this squeeze. This may be it through next Wednesday with the FOMC, but we'll get an idea out here. I'll get one tonight when we look at options. But there may be some mispriced options out there. That's what I'm going to be looking for. I think I've got one or two positions on, and I'll probably hang on to those. You could be probably short, or you could probably be long an individual equity out here, but kind of tough. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And as we said, I can make a case for being both long or short some individual stocks. Getting kind of lofty up here for the S&P and the NASDAQ, seeing some stocks getting tossed along. Very nervous market, let me put it that way. And I don't know if you can say anything other than that, but we shall persevere. As always, the market will do what the market has done before because it is a creature of people's minds, and people's minds are pretty set. And human nature doesn't change that much. So what do we need to do? We need to look to our history to see our future.
And it's all just a little bit of history repeating.
The Mr. Whipple rally from Steve Rhodes, wounded in action out here, but soon we'll be back. What is this? There we go. 1941. On this day at 7:55 a.m. Hawaii time, a Japanese dive bomber bears in with a sign of the rising sun, and its wings appear out of the clouds above the island of Oahu. A swarm of 360 Japanese warplanes that followed, descending on the U.S. naval base at Pearl Harbor in a ferocious assault. Many people know that I grew up on Hickam Air Force Base, which is right there in the bay. And for a while, in one of the houses, I could stand on the doghouse, look over the fence, and see the Arizona Memorial. Later on, when I was 7, it had to be 7 or 8, because I think it was the second or third grade. I remember getting my rear end tan because we snuck under the fence to go play on the superstructure of the Arizona, which they had cut off to make that memorial. But on this day in 1941, one of the more well-known oratories from the president this time.
Mr. Vice President, Mr. Speaker, members of the Senate, of the House of Representatives, yesterday, December 7th, 1941, a date which will live in infamy, the United States of America was suddenly and deliberately attacked by naval and air forces of the Empire of Japan.
And I don't know if there's anything more to say about it than that. Of course, I grew up in the shadow of that mere 20 years, well, actually 24 years later. And there was a time when you didn't have to be bubble wrapped before the kids went out. In the summertime, you got shoved out the door at 9 a.m., and as long as you were back for dinner, everything was fine. And, of course, always hungry. You normally made it back by dinner. Sometimes you'd forget. But we'd go up to the flight line and stuck our fingers in the bullet holes that were still there from 1941 and know the horrible price that everybody paid. Of course, when I was there in the 60s, being a young kid, the awful price of war was always at not very far down the street, living on an Air Force base during the Vietnam era, and the horrible cost that it takes. So thanks to all those better generation than us. That man, can you imagine? Everybody cries about everything now. Can you imagine if we really had anything like World War II and the hardships of it all over again? Anything approaching it? Man, there wouldn't be enough adult diapers in the world, would there? Anyway, on this day in 1941, we know what real trouble is, not just a president we don't like. Anyway, got not a lot happening in the news out here. We will talk about a few things. The president was out talking about the biotechs and pharma stocks today, kind of put a poll on all of them. Yet another tweet storm out there. Yes, that's what they're called. A tweet storm that did nothing but push this back into where I was talking about wanting to buy the IBB, which is in the middle of this gap. It did get down to 261.65. It's bounced back in here. So if you were going to buy it, this is kind of it. You got your back to the wall. You can put your stop right underneath this. That's about it. But you've pretty much completed the IBB pullback. The gap up that started to this was on the 9th of November. Did so on 11.3 million shares. Today, we've got 3.3 million shares. Not saying that this is going to be over in a day. It may go sideways for a few days. But my guess is that with the FOMC out of the way and a massive amount of people short this thing, there may be a great play in there. But we will have to see. There are a couple of gaps down below back to 245 too. And that's what you have to worry about. I would have liked to seen this thing maybe not go any lower than 265 today. That it got to 261.65 may just be a sign of the times of lighter volume. But backs to the wall, volume's going to be less than half of this gap up. And unless you can make a big case for lower prices for some systemic reason between now and the end of the year, I suspect this 265 area will hold. What else do we have going on out here? We had a few earnings calls. One is Dave & Buster's, the restaurant slash video game hotel. Solid break above. I never really, I think we were talking about this maybe a couple of weeks ago. I really just never understood the whole idea that this thing had a massive expansion. Maybe there's something I'm missing in this one. It didn't look like it was a short, but you got a sign of strength out here. A nice candle. You got 6.7 million shares compared to 1.4 million shares from the last major high on July 12th. You got it all. This thing pulls back $50 on light volume. Maybe 49. This might be something that's interesting in the near future. We'll be back after this short timeout. Give me a call at 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we've got a little breaking news out here. Elections do have consequences. If you're looking forward toward how frackers will do in the near future, Trump's pick for the EPA is General Pruitt, Attorney General Pruitt, who is of Oklahoma fame. And as they're a big fracking state, I think you could probably make an indication at the EPA, him as the head, that it'll be all full speed ahead on fracking. If you're looking at those fracking stocks, I don't think you're going to have a problem with them a la coal, where they come in and are very unfriendly to them in the near future. So I don't know if that's going to actually change the market much, but I guess for the years going forward, you really don't probably have to worry about a heavy regulatory hand on fracking. But a little bit interesting. Under Armour changed its symbol today from UA to UAA for those people that missed this. I kind of like the little setup out here. We kind of bought it a little lower. We sold it yesterday. It had some really good news. Got an NBA, NBL, Major League Baseball contract. Really didn't do much. Didn't really pick up any volume yesterday. So I punted it. It almost always, or I'm going to say 3 out of 4 times, stocks, or maybe 4 or 5 out of times. If they're going to change a symbol like this, they get a little bounce anyway. But they normally get the bounce right before the ticker change. That it really didn't get a bigger bounce yesterday kind of had me getting out a little early. I do like this pattern, although I think you're probably going to get yet another chance to buy this thing at $30. And thinking eventually this is going up to 35. But not a bad pattern out here, but also just be wary that there is a new ticker for Under Armour. There was a question out here with one of our guys out here that bought a call on it. And I don't think that there's anything other than the, I don't have the calls, so I can't tell you for sure. But you should call your broker just to make darn sure. But there probably shouldn't be anything other than a change of the symbol for those, because there's no real change underneath that. The whole thing was to change the symbol for the only voting shares, which these shares are not. I think it's like UA.C or something. And they had to change the ticker for that. And by that, they needed to really change the ticker also for this one. And not exactly sure why, but I think there were some legal reasons and maybe the voting reasons on this, but it really doesn't change too much the characteristic of it. But always when you're in doubt like this and don't wonder, call your broker and just ask them. For the most part, they're kind of the Maytag repairmen. They don't have a lot of questions to answer these days. Make a broker happy and give them a call. I don't think they charge you for it. Most brokers don't. Just make sure. But I'd say 9 out of 10 times there is no big change in this unless there's some kind of split or a dividend or some other kind of thing like that. So we will move on. But I sold it because I didn't see much in it. But got a couple of my customers ended up holding on to it. And I think I'd probably be out of it here today. I just don't see a lot. I'd like for this thing to pull back to $30 one more time on light volume, and maybe at the beginning of the year, this would be yet another one, another great setup for about $30 to $36 up here where this double gap is. So what else do we have going out here? Question for Palo Alto Networks, which is PANW. On along on it. We talked, I don't know, a week ago about my theory, and that was I thought a lot of these stocks would squeeze. And for the most part, I thought that it would be these more expensive stocks that got the biggest squeeze. It was actually the less expensive stocks that have squeezed probably the best. And one of the things in Palo Alto that you should have seen by now is something a little bit more than you've got now. It's kind of light on volume, but for the most part, the stocks that have been sold the heaviest and the ones that have gotten the lightest bounce are these more expensive stocks. So Palo Alto, why it might bounce, I don't see a lot in this one. If you were looking for a short squeeze, I'm thinking that you probably want to look for stocks that are a little bit lower. The one I'm still in is like a $12 stock when we bought it. And I kind of like that right now. That seems to be what's working. And that is fairly under $30 stocks with very high short interest. Seem to be popping just a little bit better. Who's Mr. Whipple? Oh, boy. Children. Mere babes in the woods. Mr. Whipple. You can call me at 877-927-6648. Thanks for all the emails out here. You can email me at path@tfnn.com or put a message in the den. And I guess Mike does not know Mr. Whipple. Does not know Mr. Whipple. He was the toilet paper salesman who was always having people in there with the squeezably soft Charmin toilet paper, and people were always in there squeezing it. Like they couldn't buy a roll and take it home and squeeze it. They had to squeeze it. Now Mike in the den is doing a lot of research on Mr. Whipple. He was the same. It was a guy that kind of looked like the boss on the on the Lucy show. Kind of a little thinner guy, but kind of looking that kind of guy. Kind of George Jetson boss kind of guy. That's probably is. No, not Boss Hog. Not big and fat. Just a little less. A little less than, I want to say Mr. Drysdale, but it's not. Anyway, we got a lot of other stuff going on here. Some stocks with some nice movement today with this. Vera Bradley. As we said, these stocks are coming either into the gaps down below or gaps above. This one certainly came back down into the gap below and actually back in. Volume is still big, 2.4 million shares compared to some of the previous ones. But this is back into its gap up. And that gap up happened on the 9th of December in 2015 with 7.4 million shares. We're only back into it today with 2.4 million shares. So this isn't all this bad. I dislike that it gapped down, energy increased. I would have liked to have seen 200,000 or 300,000 shares in Vera Bradley. But very few of these clothing stocks, doesn't matter where they're in, low end, high end, just don't seem to get a bid. That's kind of what disturbed me a little bit and got out a little early on Under Armour, and that is that this sector just continues to get beaten up, although you would think from price and volume that some of these would have found a little bit better lows out here. Anyway, Vera Bradley, keep an eye on this one. Since the volume did pick up, you want this thing to go sideways. But if we don't start off the new year with a slight lower, there are some stocks that have come off fairly high that may be some interesting plays come the first of the year. Keep this on your business card.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we've got Dan from Miami. How you doing today, Dan?
How you doing, Dave?
Absolutely fantastic.
I got a question. about the volatility index. I just keep watching it. It keeps sinking and sinking and sinking. I think I know what you're going to say, but when do you think this market is ever going to sell off? It just doesn't ought to sell off at more than 2%. What's your take? It's almost in the single digits. I suspect it's going to remain like this for a while longer. What do you think? My goodness.
Well, I haven't really changed my view since mid-November, and that is or late November, and that is I suspect we're going to slowly kind of move up higher out here into the end of the year, and this VIX is kind of keep coming off. Now, I came back from vacation one day early last Christmas. A week from Friday will be my last day on the air. I normally kind of take these 2 weeks off from about 2 weeks before the new year. There's just not a lot going on. It's a good time to get out and see my family. But I came back. I came back and was shorting the living daylights out of everything and picking up the UVXY on I think it was the 29th last year. And it just set up like this. It just kept going up. Volume continued to shrink. And that was it. And that's what you're hoping for. Not if you want to make money today, but if you want to make a lot of money tomorrow. And that is wait for these things to set up. And eventually they'll spike and you can make a bunch of money on it real quick. So the thing is to be patient now, be watching stocks and how they act, because the money I made last year in the first part in January was sitting there and watching conditions in December. So don't feel like if you're not making money today, it's a lost cause. This is the time to really start seeing which stocks are working well, which ones are not, and get a good idea of how things are going to start off next year when everything comes back and we don't just have a little higher each day with lighter volume, which is pretty typical this time of year.
You don't expect a lot of activity in the indexes, and I think I fully understand why. People just kind of tend to just go away for the end of the year, I guess. But
they do,
yeah.
And they know that if they were going to sell, why sell now and then pay taxes in January? If I wait till January 2nd or 3rd, I can pay taxes next year on it. If I got a stock if I've got a stock that's a dog, and I'm a retail investor, I can still sell it and take that loss off of anything I made this year. So there is a little bit of tax selling for retail investors up until the end of the year. As long as you don't rebuy the stock within the first 30 days of next year, you're cool. So there is a tiny bit of that, but it is a very tiny bit. So for the most part, everybody's just sitting on their hands for the new first year. So you get, for the most part, this is kind of a very strange year in that, hang on a second, my Mies is not working all that great. Got to clean it out during the next break. But, if you would have told me a couple of months ago that we would have been into the first week of December and I was seeing 2.8 billion shares at the bottom of the hour of my show, I would have been pretty ecstatic. But that's so we're seeing a lot more volume. We're going to higher highs. The volume is kind of picking up here. This is not a bad day with 2.8 billion shares. I think at this time last year, we probably, going into the bottom of my show, probably 2.1 billion, maybe 2 billion. So these are pretty strong days. So, I am more than willing to change my bear case if we continue to see highs with high volume, and then you pull back on lighter volume. So, we may have a very nice, long, low volume pullback next year, and it may drive a lot of people kind of nuts. But I suspect that there's going to be a pullback. Most likely, probably starts early part of January, and may go to March or April or something, and that'll just probably get rid of a lot of the froth in the market, and then we'll have an opportunity to be both long and short with a plum.
Yeah, well, that would be nice. Seriously, just I don't the news today seemed to be the biotech. When Trump said something about biotechs, perhaps, and that's what actually spiked the market. I kind of missed it. So.
Well, it
I don't
spiked the biotechs down, and everybody's bought everything else. So it's it's whack-a-mole here, where you get you get one little sector out here that gets the beaten, and everybody shoves the money everywhere else. So is this market really look that bad to me right now? The answer is no. Where it will look bad, and where I would think about shorting is you get into about the 16th, options expiration's over, and you get into that first week, and we start seeing 2 billion share NYSE consolidated tape days, and 1.8 and 1.5, and we keep going up 2 points each day on the S&P. That is the very bearish thing. The bullish thing would be to have a market that does go down 2 points on the S&P all the way into the beginning of the new year.
Yeah.
So this is going
to tend to agree with you. It just gets really frustrating. You just keep looking for a spot to add or add to your position. I'm long a little bit, but geez, I'd like to be long a lot more in these days, but it's not going to happen.
I don't know if it's you, but I hear that a lot. And the first thing that kind of comes back to my mind is Jesse Livermore, where he would talk about being out of the market for 3 months, that he wasn't working for a daily wage. He was waiting for really good setups. Now, I don't have to wait. I don't have to wait 3 months, but I do kind of like the idea that I can be out of the market and not feel like I have to be in it, and I don't have to feel like I have to make a few shekels tomorrow.
Yeah, I agree. I know what you're saying.
I got one position right now, and I'm happy with that. I think what's going to happen is I'll watch the options tonight. But I think what's going to happen is we're probably going to go sideways, maybe a little down into the FOMC meeting, and then maybe the 15th and 16th, we get a nice little pop, and maybe there's going to be a nice little setup where I'll be able to buy some calls for that Thursday and Friday and maybe make some really nice wood on it. But it's going to take a combination of finding stocks that have a lot of short interest so that a little move becomes a big move, or a stock that just gets really bad news like the biotechs today, but you can't really plan on that. I can plan on the shorts covering if the stock just continues to go up a little higher each day. And I think most of that out of the way today. 20 points on this pretty much takes care of the shorts that were too highly short this market. So I do kind of like.
Tough short. It certainly is a tough market to be short.
It's a tough market. Now, the market looked rather horrible going into November. So I can see why people were thinking about going short. It's just incredibly tough every single year to be short in December.
But be patient. I see what you're saying. Yeah, maybe next year.
Don't feel like you got to make a daily wage like an hourly wage. We'll be back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And a question that ends is, you could please comment on the NYSA, NYA, not making new highs. And kind of goes back to where I was saying that I thought it would be more of the big cap, high dollar names that were getting squeezed, and it hadn't been. It's been the lower dollar stocks, $10, $20, $30, that have seen the majority of the action. And that's not uncommon with a market that's been in a bull market for a long time. Normally, by the time the market crests, it's the less expensive, smaller cap companies that end up having a move. So that would be it. I'm not, there's a few things going on out here today, and that is that, of course, this is Delta neutral day for the options market. About 80% of the time, this is the low of options expiration. You can't expect a lower close than the high of today, almost every month. So it does kind of set a floor off. When it does not hold that is when you have some very big moves down. And again, that's, 1 out of 5 times. So you get a couple of times a year that the market really moves against it. It's more like about 95% in December. So it is very tough to get a sell-off going into December. So you can probably look at the highs. I thought maybe we got 2230 to 2250. So maybe we see 2250 as a high. Could we see a pullback into the FOMC thing, maybe 2210 or 2205, and then a move back up to the end of the year at 2250? I'm just not looking for a massive move higher out here. But again, I'm not looking for a massive move lower either. So, we're probably going to just kind of fool around here for a while. There's going to probably be some opportunities. I don't think that they're going to be in the indexes. That we got 20 points today, I thought would have taken us the next 3 days to get up here. So you may make a small case that this is a little bit more bullish than I thought it was. And maybe you're going to get a little bigger high between now and a week from Friday in that 2250 range. But again, I'm going to look at options tonight. They're going to tell me at least where the option market makers think they're going to go. But I would not be surprised to see it's kind of sell off into the FOMC next week. As soon as that's over, if there isn't anything real big, then it's going to be right back to short covering all over again. So, could we go back down 20 points to the end of the FOMC meeting? I think we can, but again, not the end of the world. We're seeing a little bit of pullback in some things that had been running, like crude's back under 50. The dollar seems to be holding fairly decently. Last time I looked, what is it out here? Where did that little devil go? Did it move? Why is it? Why is everything
Okay,
working? Oh,
well,
I moved it. Hello, somebody there?
Thank you very much. Thank you very much, Dave. That makes a lot of sense.
Oh, I didn't know you. I thought you dropped off. Sorry.
Yeah, well, that makes a lot of sense. I appreciate your view. Thank you very much. I
You
gotta
bet.
go on. Thanks.
Okay. Yeah, didn't know he was there. I heard a click earlier, and I thought that was the end of him. Anyway, what else do we have going on here? We were looking at the dollar. You know, it's off 21 cents today. Doesn't look to me like there's a lot of energy to bust this thing down under the $100 range. We're probably going to sit around here. The FOMC meeting is probably what's going to get this dollar moving again. We've had a little bit of a bounce in the TLT. But again, no juice in the TLT, at least so far today. We had 21 million shares on December 1st. We got 5 million shares today. This thing's just coming back up into this gap area. My guess is that you could play around this area for a while and consolidate out. But my guess is this thing's probably not going to have a big move until next year. If you were thinking about going long TLT, thinking you were going to get a bounce, I could see a play back up to 128, maybe 129 where this double gap is. But I don't feel it right now. I don't like the less than nothing volume on this pop off the doji yesterday. And could you just kind of be playing around this 121 to 22 area for a little while? I think you can. I don't think it's a start of a trend. I would still like to see a huge washout. You got two nice gaps out here, the one from 128 down. You got the one out here from the 30th. This makes me think that there was one more gap out here in these bonds before this thing settles. Maybe it's the beginning of the year, but that gap may take you back down to like 115, 117. And that's kind of where I would think the first opportunity to maybe find a bottom in these in this TLT is. Let's check out there. You can be like many people and call me at 877-927-6648. And email me at path@tfnn.com. Okay, just looking to see if there's in my email in basket if there's anything else out here. Talked to Andy Heck earlier today, and I don't know. He's making commodities great again. Talked to him a little bit by accident. I butt dialed him, and then he called me back. Don't see a whole lot to really scream about in these commodities. I don't think there's a lot of change. Crude kind of pulling back into the $50 range. I just never was that bullish on it, nor that bearish on it. That we got up to 52 again, just the kind of this extended trading range. Would not be surprised to see crude back in there at $38 or even $35 to make a real low. I'm wondering just how long the story will last for the people all getting together and singing Kumbaya before they start cheating. Just a lot of pressures going on in all those countries. They need the cash, and they will all cheat eventually. Just wonder how long they can keep it together. What else do we have going on out here? There were a few other stocks I wanted to look at. There they are. Some of the ones that were hurt the worst in the biotech was Bluebird Bio. This thing kind of psychos to some times. This says it's off, 10% today. This is exactly what you want in a short setup, and that is coming back and filling these gaps with light volume. He had 10 million shares a year ago, December 7th, to the day. Yesterday, it filled half of that gap, and if you want to pull a trigger, that's one of the better places to have some decent risk reward. Anyway, on the 7th, a year ago, December 7th, a day that will live in infamy, 10 million shares on the gap down. You had 2.2 into it yesterday, less than 1/5. Shouldn't expect, that you got kind of a reversal out of this and that you're, $8 lower out here today. This thing is kind of psycho. But you're into a day where the volume actually increased just on the 1st of this December, 6.7 million, but nowhere close to the 10 million. Going to get rebuffed at least the first time. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And one of the bigger poppers out here today is SodaStream. We talked about this on earnings. Soda's up almost 7% today. That's back up in this gap that goes back into May of 2014. This thing looks like it's going back to this bigger gap that's at about $45. Again, I have no idea why this thing has caught fire. I don't see a lot of people using it. Haven't been able to find anecdotal evidence that everybody is. Maybe this is the biggest short squeeze of all. But certainly, they have kind of got their mojo back. I just don't know why. Maybe someone can call in and tell me what's happened and changed at this company. But hard to tell. Anyway, $45 is kind of where you're going to find a Great Wall of China, I suspect, for all the people that were in on this hire. Jen, what's the big change in soda? That's what I can't get anybody or find anybody that says. Maybe it's on there. No longer sugar soda. Now, oh, okay. Now they're sold as sparkling water. New soda stream designs. I went in there. I just didn't see that many people around it. I could see as a way of, CEOs making rounds. I can see, how you rebadge or rebrand a product, and it makes a lot of difference. Apparently it is. I mean, the stock's going up for some reason. But I had to say that I was watching Elementary, one of my favorite shows on TV. There are not many that catch my imagination or that can keep me fooled till the end of the show. Normally 5-10 minutes in and I can tell you everything that's going to happen. They're kind of not written with a good hook in them that keeps you wondering. But that show's pretty good. I like the whole idea of deductive reasoning, kind of like those kind of shows. But was watching one that had aired a couple weeks ago, and the whole thing was about this meat substitute. They called it Schmeat, which is a sheet meat product that was biologically made in a lab, not from an animal. And the whole thing was that they were going after the Jewish and the Muslims that couldn't eat certain meat products, and that there were 1 billion of them. So they wanted it labeled a very certain way. So they ended up killing off, in the show, of course, killing off somebody so that it would be more likely that it would be labeled the way that would make this product target a billion people. And I thought it was very interesting, but that's kind of the same thing. You just have to make sure that it's, as they kept on saying during the show, make sure that this stuff is not over in the tofu aisle or in the, turkey burger things or the tofu burger stuff. Everybody knows what that stuff tastes like, and it's wood. If I have another person tell me how great tofu burgers are and everything, I think, will it be justifiable homicide? I think so. I think I could sell that. If anybody's had to ever deal with one of those folks telling you how great it was, you can eat it if you want. Just don't lie to me about it tasting great. I know it doesn't. There's nothing like what's for dinner, which is that big, hefty T-bone tonight. What else is out here? That goes through all. Let's take a look and see how some of the FANG stocks are doing when we come back. Talk to the hand. Where's the beef? I know where the beef is. And it ain't on the tofu aisle. We'll be back in a minute. Oh, no, we're done for the show. See you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.